Margaret, Robert, and Sylvia built fortunes the old-fashioned way, but when the world changed around them, the strategies that once guaranteed security became their biggest trap. Margaret Hayes had always believed that money was a game of patience and precision. Born in 1955, she grew up watching her father meticulously manage his finances, carefully balancing ledgers and clipping coupons, convinced that wealth was built one thoughtful decision at a time. By the time she reached adulthood, Margaret had absorbed every lesson her father taught her: invest in stable companies, avoid unnecessary debt, and save relentlessly. She carried these habits into her career and personal life, eventually turning them into a quiet empire of wealth that most of her peers envied. Her portfolio included a mix of long-term stock holdings, rental properties in reliable neighborhoods, and a conservative savings account that had grown steadily over the decades. Margaret's friends often marveled at her ability to live luxuriously while appearing disciplined and prudent. Her vacations were glamorous but never reckless, her wardrobe impeccable but never ostentatious, and her home a symbol of taste and financial foresight. At first, Margaret's approach seemed foolproof. Her investments in dividend-paying stocks consistently outpaced inflation, and her real estate holdings provided a steady stream of passive income. She was careful, methodical, and always one step ahead of financial trends, or so she thought. As the years passed, however, subtle shifts began to undermine her confidence. The once reliable companies she invested in showed signs of stagnation. New industries emerged at breakneck speed, and interest rates that had long favored her savings accounts began to plummet. Margaret noticed these changes but brushed them off, trusting in the strategies that had brought her success for decades. What she didn't realize was that the world around her was evolving faster than her methods could adapt. The stock market was no longer a slow, predictable climb but a volatile landscape driven by technology and global shifts. Real estate had become a game of high-stakes speculation rather than steady appreciation. The safety nets she had built with care and experience were quietly eroding, and the strategies that had once made her wealthy were becoming outdated. Despite her wealth, Margaret's sense of security began to fray. Small mistakes, previously inconsequential, now carried heavier consequences. She remained confident, even as the cracks in her empire widened. In her mind, decades of careful planning should have been enough to guarantee financial stability. But the world had changed, and Margaret's old tactics were no longer as reliable as she believed. The first signs of vulnerability were subtle, almost imperceptible, yet they marked the beginning of a story where old wisdom would clash with a new, unpredictable reality, setting the stage for challenges that Margaret had never anticipated. Robert Ellis had always considered himself a master of financial prudence. Born a few years after Margaret, he had spent his early career in banking, rising through the ranks by relying on conservative, risk-averse strategies. Bonds, mutual funds, and gold were his domain, and he prided himself on never making a mistake that could cost a client or himself a single cent. Over 30 years, Robert had built a comfortable retirement fund, confident that his disciplined approach would provide security for the rest of his life. He watched the world change from a safe distance, convinced that tried and true methods would continue to work indefinitely. At first, Robert's confidence seemed well placed. His investments delivered steady returns, and his savings outpaced the slow creep of inflation. Friends and family often turned to him for advice, and he was proud to see his conservative choices validated time and time again. But as the years passed, subtle shifts began to undermine his carefully constructed financial world. Interest rates dropped to historic lows, making his conservative investments far less profitable than before. The stock market experienced rapid changes driven by technology and global events, leaving his long-held strategies less effective. For the first time, Robert noticed the cracks in his financial armor. Desperation began to creep in. Unlike Margaret, who clung to her old tactics, Robert decided to act. He liquidated long-standing assets, moving into trendy sectors he barely understood: volatile tech stocks, cryptocurrencies, and high-risk startups promising exponential gains. Initially, these risky bets produced small victories, enough to reaffirm his sense of control. But the victories were fleeting. The markets moved unpredictably, and what had once been safe and predictable became a dangerous gamble. Slowly, the very safety net Robert had relied upon for decades began to unravel. As Robert's losses mounted, he became increasingly isolated. He had built his life around the notion that careful planning and adherence to established strategies would protect him. Yet the world had changed faster than he could adapt. The tactics that had once guaranteed stability now seemed almost naive, leaving him exposed to scams, high fees, and predatory schemes that preyed on retirees who clung to outdated methods. His confidence turned to a knees, and every financial decision became a test of nerve. For the first time in his life, Robert realized that longevity in the financial world required more than experience and caution. It required adaptability, insight, and the willingness to confront uncomfortable truths. By the end of the year, Robert's quiet assurance had eroded, leaving him to face a harsh reality. The strategies that had defined his entire life no longer offered security, and every choice carried consequences far greater than he had ever imagined. The stage was set for a confrontation with the unforeseen forces of a modern, unpredictable economy. Sylvia Kane had always believed she had an instinct for real estate that was unmatched. Growing up in the 1960s and 1972, she had witnessed the steady rise of suburban neighborhoods and had learned to identify undervalued properties before anyone else noticed their potential. By the 1980s, she was buying, renovating, and selling homes with a precision that seemed effortless. Each deal reinforced her confidence, and soon she had built a network of contacts, contractors, and realtors who trusted her judgment implicitly. Sylvia's wealth grew quietly but steadily, a testament to her keen eye and disciplined approach. For decades, her strategies worked flawlessly. Housing markets were predictable, interest rates manageable, and properties retained value over time. Sylvia could almost calculate her profits before closing a deal, and the consistency of her success made her feel untouchable. But as the years passed, the landscape began to shift beneath her feet. New regulations complicated property transactions, technology introduced platforms that changed the way homes were bought and sold, and global investment trends started affecting local markets. The steady appreciation she had once counted on was no longer guaranteed. Determined not to lose her lifestyle, Sylvia pushed forward aggressively. She began investing in overseas properties, drawn by promises of higher returns, and experimented with fast-turn flipping schemes that required enormous upfront capital. She even began lending money to strangers with assurances of rapid profit, convinced that her decades of experience would shield her from risk. At first, her ventures seemed successful. Profits arrived as expected, reinforcing her belief that her instincts were infallible. But one deal, seemingly routine, would change everything. A property she had purchased overseas became entangled in a complex legal dispute. Ownership documents were contested, local authorities were unhelpful, and the funds she had invested disappeared into a labyrinth of bureaucracy and fraud. The losses were substantial, far beyond anything she had encountered in her career. For the first time, Sylvia realized that her old tactics, once reliable, once profitable, were no longer enough to navigate a world transformed by speed, technology, and unpredictability. The shock of her failure reverberated through every aspect of her life. She had relied on experience and intuition, assuming that what worked for decades would continue to work indefinitely. Now, she faced the harsh truth: the real estate empire she had built with care could crumble almost overnight. Sylvia's story revealed a new reality for her generation, one where confidence and skill alone were insufficient, and where the tactics that had once guaranteed security could suddenly become a liability in a modern, volatile market. Meanwhile, behind the scenes, a shadowy network of financial operators had been quietly exploiting the very vulnerabilities that Margaret, Robert, and Sylvia were only beginning to notice. At the center of this network was Marcus Drake, a man whose reputation was built on charm and secrecy. He had discovered a truth that few others recognized: baby boomers, despite their careful planning and decades of experience, often clung to outdated financial habits. These habits made them predictable, and predictability in finance could be manipulated for enormous profit. Marcus specialized in turning the confidence of retirees into an opportunity for himself. His firm presented itself as a modern financial advisory service, promising to update clients' portfolios and protect their wealth in a fast-moving economy. Marketing materials were polished, offices gleamed with success, and every employee seemed knowledgeable and trustworthy. Margaret, Robert, and Sylvia were drawn in, each seeking guidance as they struggled with the failings of their long-held tactics. Marcus promised that his strategies would bridge the gap between the security of old school methods and the high returns of today's market. The allure was irresistible. Decades of careful savings could finally be leveraged to achieve not just stability, but real growth in a world that had outpaced traditional methods. Once clients signed on, the reality was far darker. Marcus' firm funneled money into complex investments, high-fee funds, and offshore accounts that seemed legitimate on paper but were effectively designed to siphon wealth. Small, unexplained losses were presented as market fluctuations. Short-term gains were exaggerated to lull clients into trust. The longer clients remained, the deeper their money went into Marcus' control, often without their full understanding. Even the most cautious and experienced investors were caught off guard. Margaret's meticulous planning, Robert's conservative approach, and Sylvia's real estate acumen offered no protection against a system designed to exploit every blind spot. By the time the first signs of trouble emerged, the consequences were severe. Attempts to reclaim funds were met with resistance, legal complications, or delays that seemed intentional. The very traits that had made these retirees successful, discipline, trust in proven methods, and patience, became vulnerabilities in a world manipulated by someone who understood how to exploit outdated financial instincts. The reality was chilling. The old tactics that had once provided safety no longer offered protection, and in some cases, they had become the very tools that allowed predators like Marcus Drake to prosper. The story was no longer just about failed investments, it was about a generation struggling to navigate a world that had evolved far beyond their methods, facing adversaries who preyed on their confidence and expertise. The financial landscape had become a battlefield, and the rules had changed without warning. By the time authorities finally uncovered Marcus Drake's operation, the fallout was staggering. Hundreds of retirees, including Margaret, Robert, and Sylvia, faced the harsh reality that decades of careful planning had been undermined by a combination of outdated tactics and predatory schemes. The financial empires they had built with patience and discipline were no longer safe havens. They had become fragile constructs exposed to forces they had never anticipated. Margaret found herself staring at a portfolio that had lost value faster than she could calculate. Robert realized that his so-called safe investments had become gateways for losses, and Sylvia grappled with properties and overseas deals she could no longer reclaim. For many, the experience was humiliating and terrifying. They had prided themselves on wisdom and experience, yet that very confidence had made them vulnerable. The shock was compounded by the realization that the financial landscape had shifted so drastically that the strategies which had once guaranteed security could now lead to ruin. Yet, amid the despair, there were lessons to be learned. Survivors began to adapt slowly but deliberately. They sought knowledge about modern markets, digital finance, and regulatory protections. They discovered that flexibility, research, and vigilance were now as important as discipline and patience. The tragedy of the baby boomer money tactics was not only the financial loss, but the emotional toll. Generations raised on the promise of steady growth and predictable outcomes were forced to confront uncertainty in ways they had never anticipated. Many faced sleepless nights, anxiety, and a profound sense of betrayal, not just by Marcus Drake and his schemes, but by a world that had evolved beyond the strategies they had trusted. Yet, in some cases, adversity bred resilience. Survivors rebuilt cautiously, learning to combine old wisdom with new understanding, transforming failure into opportunity. The documentary closes on a sobering but vital note. What was once considered secure pensions, traditional investments, and conservative planning can no longer be taken for granted. The story of Margaret, Robert, and Sylvia serves as both a warning and a lesson. Relying solely on tactics that worked in the past may provide temporary comfort, but without adaptation, those same tactics can become liabilities. In a world that moves faster than the experience of any single generation, financial security requires not just knowledge of the past, but awareness of the present and foresight into the future. Ultimately, the story is a cautionary tale. The money tactics that built empires for one generation may fail spectacularly for the next. Survival and success now demand vigilance, flexibility, and the humility to recognize when the old ways are no longer enough. The world has changed, and those who do not change with it may pay the price in ways that are both profound and irreversible.